Welcome back into another new session with me, Geetu. So, today, what is the topic that we're going to be learning? Yes, we have completed the other remaining forms of business organizations from sole proprietor, joint Hindu family, cooperative society, types of partners, who is a partner, partnership. So, today we will be joint Hindu family as well. So, today we are going to be looking into one of the most important topics of all, and the most important topic is called the joint stock company. So we'll be learning what is the stock company, then the features, merits and demerits. There is no types, so I'm going to put an into mark for this, but the remaining we would be learning all these things. Okay, so when it comes to mark wise, the meaning would come for a 1 marker or 2 marker. The features usually comes for an 8 marker, so it's very important. The merits will come for a 4 marker, demerits will come for a 4 marker, so both put together can also come as an 8 marker. So these are the topics what we will be learning in today's session. So it's very important for you to understand what is a joint stock company, then the features and merits and demerits, because most of the times there is at least one question which comes from this particular topic. Okay, is the meaning of a joint stock company, or how exactly a joint stock company is formed? I told you, for you to start a cooperative society, you need 10 members minimum. For you to start a sole proprietor, you need one member at least. It's a known business which is starting. And for joint in the family, you at least need, let's say, three people. Yes. So, what is the meaning of joint stock company? It tells you by itself it's a company, and it is stock. Stock refers to, let's say, a lot of goods and goods which has been provided, goods which has been manufactured, or services which has been provided. And it is a huge company that we're talking about. We're not talking about small companies here. We are talking about companies like IBM, Oracle, Siemens, then let's say the other companies as well. So what exactly is is a joint stock company? You need to know, first thing, it's governed by the act of 1956. You know by now the partnership act is governed by 1932 act, and joint stock company is being governed by the companies act of 1956. So it's a company, it's an association of people, so people are coming together. But here there is no maximum limited limitation of people. Minimum you require 7 people, maximum you require unlimited number of people to keep joining into your company and keep working, because every person who's going to come into your company is going to bring in capital or money. Without the person investing money, they cannot be called as shareholders, or they cannot be called as the owners of the company. So it's very important that when they come, they bring in capital, so that they're called as shareholders or the owners of the company. Okay, so what is this joint stock company? It's a company, it's an association of persons, like I told you. Without people, the company cannot be run. So it's an association of people. Okay, for what it is formed? It's formed to carry out any business activity. That business activity, by now you know, it's an economic activity which refers to production, procurement, or sale and goods or services. Okay, and all this is done legally. Okay, so first thing is, what you need? People. That is association of people. Then it's a business which has been carried out. So these people come together, they are doing a business, and this business is legally done. Okay, so there are four important terminologies. Every time I teach, I tell my students, see, these are the terminologies which you need to understand. If these terminologies are not there in your answer while you write your answer is wrong. So trust me when I say these terminologies are very important. So make sure these terminologies are going to be there when you are going to be learning this particular topic. And make sure you're making points of these terminologies and underlining them. So when it comes to meaning of joint stock company, this term called artificial person, separate legal entity, perpetual succession, and common seal is very, very important. Okay, the same terminologies comes under the features. So what is an artificial person? Who is considered as an artificial person? The company, I'm going to circle here, the company is called as an artificial person. Okay, the company doesn't have life, doesn't have, yeah, doesn't exactly, cannot breathe. So that's the reason the company has been treated as an artificial person by law. It has separate legal entity. Separate legal entity refers to the company being separate and the owners being separate. Perpetual succession, whoever comes, whoever goes. That means whoever comes, whoever works, whoever dies, whoever goes out of the company, whoever joins another company, doesn't really matter for our company. Reason because a company will move on forever. That's what is called as perpetual succession. Whoever comes, whoever goes, doesn't really matter, the company will move on forever. And common seal, that means what, the company has its own existence, its own seal legally by law. So there's no problem, uh, there is no problem at all for the company. The company can manage all by itself. Okay, so these words are very important when it comes to the formation of the company. Without these words, the let's say without these words, the meaning would not be complete at all. Okay, so the next lines. Okay, so the shareholders are the owners of the company, while the board of directors, so in such big companies, joint stock companies, definitely there needs to be a board of directors group. Board of directors are people who have invested maximum amount of money into the let's say company, and they have been elected, by the members, because they have taken a lot of decisions in the formation of the company. When we come to the sixth chapter, formation of the company, that time you actually know, learn this chapter, learn this particular topic in detail. Okay, so now I don't want to stress on much things. So the owners exercise an indirect control over the business. Why? Because the shareholders are the ones who have invested a lot of money into the company. So the money what's been invested by the shareholders, the capital is being divided into smaller parts called shares. So if you actually see here, it clearly says, so for you to easily understand, you just need to remember the capital, the big capital is divided into small parts called shares, and these people, whoever wants to buy the shares, will buy it from the particular organization. Okay, so even if you don't understand this topic, I would re-explain it later for you. Okay. To the features of the company. The first one is called separate legal entity. Separate legal entity, by now I told you, the company is separate, the people, that is the shareholders or the owners, are separate. Okay, the company has its own legal entity, legal existence by law. Then it is an artificial person, it's a person who cannot breathe. Okay, but not a citizen, it's an artificial person. So when you refer to companies, you call it as IBM, Accenture. So what are you? You're giving it a legal entity, and you know it's an artificial person. It cannot breathe, it cannot eat. Perpetual succession. So who, even if the IBM CEO resigns, or let's say Narayan Murthy resigns from Infosys, you know that the company will continue forever. There is no end to the company. That's what is called as perpetual succession. Then common seal. Common seal refers to common seal refers to the company having its own legal logo. Okay, or its own identity, its own indication. Like if you talk about, let's say, McDonald's, you have that MCD. I'm just giving you an example. Okay, now don't ask me if McDonald's, ma'am, is a joint stock company. No, it's not a joint stock company. Now separate name, separate, it has its own brand name. It has limited liability, transferability of shares, separate property, number of members. Now see, this is just a slide which I have inserted for you to make things simpler. Don't go by this, but ensure that you put here for you, because this is what you're going to be learning and writing. Okay, so first one, artificial person. Like I told you, the company is being created by law. So when the company is being created by law, it has its own existence. It cannot, it, yeah, definitely it cannot breathe, it cannot eat, it cannot run, it cannot. But what can it do? It can definitely buy properties in its name, it can borrow money, it can sue people and be sued. What is the meaning of sue and be sued? Sue means it can file a case. Okay, so let's say I'm IBM, I want to file a case on Accenture manager. So what is it? I have the right, the company has a right to file a case. So it has a right to file a case, it, someone else has a right to file a case on the company also. That is what is the meaning of sue and be sued. Yes, I hope you understood. Then the second one is separate legal entity. Separate legal entity refers to having your own identity. So just like how it's here, this is business. So this is IBM. I'm just giving you an example, okay? And this is the owner. Okay, these are the owners who have invested a lot of money. So what are they saying? When the company is registered with its name called IBM, the owners are separate, the organization is separate. Nowhere the owners are in link up with the company at all. Okay, so the business is separate and the owners are separate. So that's what is that's what they're saying. The company has its own distinction, and the assets and the liabilities are also separate. So if we talk about here, the business will have liability will they have. I'm sure by now you would have at least analyzed to know what liability they would share. If you have not understood by now what liability the company will share and the owners will share, don't worry about it, I will teach you. So the third one is formation. Now what exactly is formation? Formation is when you are going to begin your company, when you're going to start your company, there are a lot of legal formalities that you need to let's say fulfill. Okay, you need to prepare several documents, several legal requirements. So to start, the registration is itself is very tedious job because it takes a lot of time and it's very very compulsory. So please ensure when they ask you, what about the formation of joint stock company? Is it an easy procedure? You should say, no, it's a very time consuming procedure. It's a very expensive procedure. There are a lot of legal documents, paper documents that you need to submit, and it's a tedious job. It's not a very easy job for you to start off the joint stock company just like your sole proprietor joint in the family. Because here we are talking about loads of people who are going to invest their shares, and we're not talking about small amount of capital, we are talking about huge amount of capital, and the company's existence is lifetime forever. Okay, so definitely the formation is not going to be an easy job. So these are the stages where the company has to cross before it starts. So only if the company crosses all these stages can they actually go into your opening or formation of your company. And one more important thing is this, the thing that I have actually ticked, this you'll be learning in your chapter, in your formation of a company chapter. Okay, so the next point, perpetual succession. What is perpetual succession? I just told you, whoever comes, whoever goes, the company will not close up. The company will continue forever. The life of the company will continue forever because it's registered by law. It does not have any end. If it wants to close down, it can only be cut done by law again. So if you want, there are no board of directors, there are no chief. I was telling you, it cannot be brought to end because it's being created by the law. So even the formality of closing down a company, that also will take you loads of time and it's very time consuming. So The fifth one is control. Now, the entire management or the entire, let's say, the entire control of the organization, the joint stock company, is undertaken by the board of directors. Okay, because when you are going to form a company in the initial stage during the registration procedure, registration means when it's going to get registered as a company. I told you there are a lot of formalities that has to be completed, right? So one of the formalities is you need to get your board of directors, and your board of directors need to sign, 15 directors need to sign on the documents of the company. So when these board of directors are signing, they would definitely invest capital, and they will be the ones who are going to take a lot of decisions in the company. So what they are saying, the shareholders will only come later. Once the board of directors sign the documents, later the shareholders would come and they would also invest their money. So there's always what they actually say, the CEO, there is something called as top level management, middle level management, lower level management. When you come to your second PUC, there's something called as levels of management topic, which is very important. Okay, so what they are saying is the board of directors come under the top level management. So any decision that has to be taken in the company is taken by the board of directors or the shareholders, and these people come in the top level management. Okay, so the control of the company is taken care by these people, and these people come in the top level management. So that is the reason I put this particular picture for you so that it's easy for you to understand. So the other ones will be taking the decisions, what should be done, when things should be done, all these kind of decisions. Yes. Liability, like I told you, the company is separate. Okay, I'm going to write down big. Company is separate, and the owners and the shareholders are separate. The company has its own legal entity, it has its own perpetual succession, it has everything separate. So in that case, the company will share unlimited liability. Okay, and the owners will share limited liability. In simple, I'm telling you what is unlimited liability. The company, in case of a loss, okay, the company, in case of a loss, will sell the company's entire money, will be used by the creditors. Again, I'm telling you, in case there's a loss, the company's money will entirely have to be paid off to different people. And even if that is not sufficient, the personal assets of the company will be used to offset the loss of the people. What about limited liability? Now, owners are always having limited liability, which is a good thing, which is a safe thing. Why? Limited liability refers to in case of a loss, what is happening? Only the business assets are being sold, no personal assets are being touched. So I'm going to write down here, limited liability refers to only business assets going to be sold. Okay, only business assets. Okay, and big no to personal assets. So nobody is going to be touching their personal assets. But when you're talking about unlimited liability, both business assets and personal assets are being sold. See, all this you need to understand, and all this I've been teaching you from sole proprietor till now. I've been teaching you this particular topic. So please understand, all these terminologies are important when you're talking about limited liability, unlimited liability, and you need to know also when we are talking about uh, what is, see, the members have limited liability, the company has unlimited liability. You need to know it. Okay. Common seal. Common seal, again, it refers to the company being as an artificial person. Okay, so the company's name is, let's say, IBM. I'm just giving you an example, a random example of the company, because most of you all know IBM. Okay, if you all don't know, just Google it up and see which company is IBM and Accenture and Goldman Sachs. All these companies are MNC companies and joint stock companies. Okay, so you know that these companies are run by the board of directors. So during the formation itself, when during the registration procedure itself, the directors have to come up with a common seal. Okay, and this seal if you actually see a fee receipt, you would have your college seal which has been put there like that. I'm just giving you an example. The common seal refers to an official signature of all the members, that's all the board of directors. And if you look into big companies common seal, the common seal will be put by a rubber stamp, which is again and below that there would be the signature of the people. So what are they saying? The common seal is a very important, let's say, point why you need to understand. Common seal refers to this, okay, which shows that a lot of legal documents, if it does not have the common seal, then those documents will not have any validity or it will not have any value. Okay, so the common seal is a very important thing, but again, it is not a legal binding of the company. Okay, so so it's very important for all the documents to have the common seal. Then the next one is risk bearing. I know, I'm sure that this topic is pretty lengthy, but trust me, the features are very important for an 8 marker. And most of the features are the ones which would come for the merits and the demerits. So if you learn the features properly, for you to understand the merits and demerits will just take you another 10 minutes. Okay. So, what the next topic is risk bearing. What is risk bearing? All the risk is borne by the shareholders to the extent of shares. That means if you are a shareholder, if you are a person who is investing 10,000 in the is investing 10,000 into the company, the value of risk that you're going to undertake is worth 10,000. If you are if you are a board of director, you have invested, let's say, crores of rupees into the business, then what happens? You have to bear so much of risk into the business, and the profits also you will share so high. So higher the risk, higher the amount of profits, higher the risk, higher the amount that you have invested. The next topic that we're going to move on is the joint stock company merits and demerits. Okay, now there is one point in features which we have missed, that's transferabilities of shares. Now what exactly refers to transferabilities of shares? Now, as I told you, the shareholders and the board of directors are the people who have invested their money into the business and they are the ones who run the business, right? So without these shareholders, if they've invested 10,000 of shares, let's say they have invested 10,000 rupees into the business, they can sell this 10,000 to someone else who wants to buy the shares of the company. Okay, so there is a lot of advantage in a joint stock company. You can buy the shares, you can sell the shares in the joint stock company. There is no rules, for hard and fast rules telling that you cannot buy, you cannot sell the shares in a joint stock company. Okay, now moving on to the merits and demerits. If you actually look at the merits and demerits, by now you have already learned this, we have already learned these things. So merits, we have merits refers to advantages, demerits refers to disadvantages. Don't get confused. Okay, again I will mention it here for you. Merits refers to advantages, okay, and demerits refers to disadvantages. Okay, so what is the merits? It has limited liability, which is a very good thing. Why? Because whatever money you are earning, even if you have to undergo a big loss, whatever money you earned as profit, if you invested that money in your personal things, okay, nobody can touch your personal things. They can only take care, they can only take the money from you until the extent to what you have invested. So let's say you've invested 1 crore, but you have earned a profit of 5 crores. So they can only take that 1 crore from you. The remaining 4 crores, you can actually invest it into into your other things. Nobody is going to touch that in case there is a loss. Transferability of interest refers to transferability of shares. Okay, so this, again I'm repeating the point. So if you want to buy your shares, if you want to sell your shares to anyone else, suddenly you have a financial difficulty, you want to end up selling the shares, you want to earn money, so in all that case you can sell your shares. Continuity of existence, whoever comes, whoever goes, I told you the company will continue forever. There is no stop to the company. Okay, people will keep joining, people will keep investing their money. Then scope for expansion. Yes, it is very easy for this company to expand. Why? Because many people want to invest their money into the shares. They want to, let's say, save their money into shares. So what happens here? There is scope for expansion, and even banks are ready to provide loans to such kind of companies. Why? Because the companies are huge, so the profits that they will be earning is also a big amount. Then professional management. What refers to professional management? You know that there is the management is held by the board of directors. The top level management is the ones who takes all the decisions, and definitely if they have invested their money into the company, then there is no need for them to let's say there's no need for others to worry, because these people are professionals and they will ensure that they take the best decisions which is suitable for everyone. Yes, so these are the limits, sorry, these are the advantages. Then disadvantages: complexity information. Like I told you, a lot of rules, lot of regulations, lot of registration procedure itself will take you at least a year, because so much of paper documentation you need to follow. Then lack of secrecy. Why as a sole proprietor can maintain secret, joint in the family can also maintain secret because it's a family business. But joint stock company, there is, it's not a family business, it's a huge business, so definitely there is no secrets. Here and there things get leaked out very easily. Then impersonal work environment. Impersonal means what? Here there's no brother sister, mother father cousin relationship. Here you are dealing with everyone and anyone. Okay, so there it's a very impersonal relationship. You are dealing with them for money, so it's not a personal relationship. Then you have delay in decision making, oligarchy, management, conflicts in interest. Looking into your topic here. Again, looking into the merits of joint stock company, like I told you, it's very simple. The members have limited liability, so they don't have unlimited liability, so they have, their burden is being reduced. They can bear the risk and they can invest whatever money that's been earned by them somewhere else also. So the shareholders are liable to the extent of amount unpaid. So in simple terms, I'm telling you, limited liability refers to in case there is a loss, only your business assets is going to be sold. No way your personal assets is going to be touched. That refers to your limited liability. Transfer of interest refers to transfer of shares. Okay, so what are they saying? In case you need sudden arise of money, okay, you can easily convert the shares into your cash into by selling the shares in the share market. So share market is a place where all the people who want to buy and sell their shares would come and sell the shares in the share market. Just like how we have a normal vegetable market, like that you don't have a normal vegetable, you don't have a normal share market, but you have an online share market. Online share market, probably you can log on to Google and you can check share markets, and you will have a lot of websites. There you can buy and sell a lot of shares. Okay, so easily you can convert your shares into money. Then perpetual succession, that's what I was telling you. Whoever comes, whoever goes, the company will continue forever. There is no end to the company. Hope for expansion, the company can easily expand. There is a lot of loans that's provided to the company by financial institutions. Investors are waiting in to come and put in their money here. Why? Because the liability of the members are limited liability, so the risk what the members are taking is not going to be very high. It's going to be high, but definitely not to the extent where their personal assets will also be taken. Okay, so definitely people will want to come and invest their money. Then professional management, what is this? The company can also afford to pay high salary, because the company is definitely earning money, and can also have a lot of professionals, lawyers, then doctors, then whoever, let's say people in their field. See, if it's a research company, then definitely you need doctors, researchers, scientists, all those kind of people. So the company can employ them. Why? Because the company can afford to pay them. Yes, so and the company it'll have various departments also, like the finance department, marketing department. You talk about human resources department, any department, it will have numerous departments also. Why? Because uh, these companies are huge companies and they are professionally managed by the top level management. All the decisions are taken by them. So when they are taking decisions, definitely the decisions are going to be worthwhile. Okay, down to the demerits of joint stock company. See, these topics are very very simple, because if you understand the features and the meaning of the of the topic, then these topics are self explanatory, because by now you would know what is joint stock company, the features, and that's the reason I went into very much of detailed explanation. So, coming down to the first demerit of joint stock company, complexity in formation. Like I told you, there's a lot of legal procedure that needs to be invested when it comes to starting of the joint stock company. There's a lot of paper formalities, legal formalities, and the people have to have a lot of knowledge and efforts need to be put into. So it's not an easy job for you to start this kind of company. It's a very tedious process. It takes a lot of time consuming. Okay, then what about the secrecy? Definitely there is no secrets that can be kept as a secret, because the board of directors are also many here. Then the shareholders who have invested a lot of money into the business also needs to know about the financial strengths and financial weaknesses of the particular company. So, when it comes to secrecy, there are no secrets. There is lack of secrecy. It's not very easy to keep secrets or maintain secrets, because by the end of the time, whatever profits and losses, financial statements, all this needs to be submitted to the government as proof. So the company's entire history will be known by the government, and there are a lot of people, thousands and millions of people who have been investing their money into these companies, so they all need have a right to know about the company. You have impersonal work environment. Like I told you here, people just want to invest their money, want to mint money, and they are people who do not have any personal relationships like friends. They don't treat each other as friends, but they treat each other as business partners or employees or customers or creditors. So there is no personal contact or personal relationships that is maintained in these kind of companies. So there is, see, they do not maintain any personal contacts or relationships. Everybody is treated as official and everybody is treated as business. Okay, so numerous regulations. Definitely I told you, when the registration procedure is high, there will be lot of regulations that you need to undergo. Why? Because these kind of companies what we are talking about, these companies have a lot of procedures, tedious procedures, not easy procedures. Okay, so filing of reports, they have a lot of preparations of documents, they have their certificates they have to submit. See, when I'm telling you now, you will not be able to understand, but definitely when I'm teaching you the sixth chapter called formation of a company, there you can actually see the stages in the formation of the company. That time you would understand what I've been telling you. Okay, so it is not a very easy job. It takes a lot of time, a lot of effort, and lot of money that needs to be spent. So there is a lot of regulations, there is registrations. Then you need to register even in SEBI, that Securities Exchange Board of India. This is one of the branch where you can go and buy and sell your securities, your shares. Okay, so numerous regulations refers to a lot of operations which is time consuming, efforts need to be spent, and money that needs. Then, delay in decision making. Definitely, we are talking about following this triangle. This triangle is divided into top level, middle level, and lower level. So, definitely, what is happening? If there is a problem in this lower level management, the lower level management has to report to your middle level. The middle level management will take the problem and submit the problem to the top level management. So definitely there's a lot of time consuming, there's it's a time consuming activity, and there is lot of time that's been wasted. Okay, so why you do not have the permission, the lower level management do not have the permission to directly go and tell the problem to the top level management. Example, simple example I'll tell you. Let's say in your college or in your school, if there's a problem, the first thing the students do is go to the class teacher. So let's say the students are the lower level management, that your teachers are your middle level management, your principal, and above your principal, whoever is there, is your top level management. Can the students directly go to the principal? No. Reason, because if the students have any problem, they need to follow the hierarchy, they need to follow the, let's say, the set rule, where they have to first go to your teachers, and then your teachers will try to solve the problem. If it does not work out, then the teacher would say, yeah, please go and tell to your principal, and let's see what solution we get. So what is happening here? This is simple example, but in the company, we are talking about, let's say, lakhs together of employees. When we have so many employees, definitely there's going to be a lot of problems. So every time there is a problem, you need to follow the hierarchy of top level, middle level, lower level. That's the same thing that is here. Yes. So what is happening? There is delay in communication that is taking place because of this. Then conflicts of interest. What is happening here? There are various stakeholders. Stakeholders means what? There are several board of directors, there are several shareholders who have their own interests. Then they have their own people want this salary, they want high salary, they feel they have done a lot of job and they are not paid proper salary. All these are problems which keep coming up in these kind of companies. So what happens, there's a lot of conflicts that may occur, problems that may occur. Okay, so it's very difficult to satisfy the interests of everyone in these kind of. And the last one is oligarchy management. Now, what is this oligarchy management? They say it is in a company is a democratic institution where everybody has the right to take decision, but the board of directors are the people who are representatives of shareholders. So what are these? The board of directors are the ones who actually take most of the decisions, and the shareholders are the ones also who have to take decisions in the company. But happening here, the shareholders end up investing their money not only in one company. Like you've seen partners, right? Partners invest their money not only in one company, they invest their money in so many companies. Like that, their partners are also called as shareholders. So the shareholders invest their money in different types of companies. So what is happening? Indirectly or directly, the board of directors end up taking all the decisions, because the board of directors are permanently there with the company till the end. So this oligarchy means an organization that's run with by a few specific individuals. So let's say these are your board of directors and these are your shareholders. So what they are saying is these are your board of directors and these are your shareholders. So the company is run mostly by the board of directors, and they are the ones who take all the decision. So oligarchy refers to rule by the few. Rule by the few means the board of directors, and shareholders is not a small group, it's a very large group. So whatever interest the shareholders have, whatever they feel like telling or doing, they are not given an interest to speak, or not given so much of let's say value. Why? Because most of the time these people do not attend the general meeting, these shareholders, because they've invested their money and they concentrate somewhere else. So the board of directors are the ones who are always there with the company as permanent employees, and they are the ones who are working with the company. So these people and the shareholders get scattered also. So like example, I'm in India, or let's say I'm in US, I can buy the shares of UK companies, I can buy the shares of Nigeria or African companies. So like that, the shareholders are scattered here and there. So that is the meaning of oligarchy management. Oligarchy management refers to rule by the few. Rule by the few means what? Just few people who rule the entire company. That is where the board of directors come in. All of you have understood this particular topic. I know today's session was a big session, but Yes, it's a very important session as well. Please ensure all of you are listening to it. Any doubts you have, any questions you have, likes, please share share the video so that it would help other people also to understand. Any doubts, any comments, please type it in the comment box or get in touch with me. Thank you so much.